Hey, what's going on, everybody? My name is Lamont. I've been a full-time trader for 6 years now, part of the Chart Guys team for about half that time, where I head up our futures room and the swing report. In this video, we are going to go over some of the recent updates from last week, and in a full disclosure kind of style, we'll go over it in a good, bad, and ugly kind of a way. And we'll also check out some potential follow-up ideas heading into next week. So without further ado, let's get into it. Okay. So let's start with the good. And so for the good, last week in KMX, we were looking out for the potential of follow through on this daily lower high being set. And the setup that I shared with you guys was the idea of, okay, well, if they open up weak under the point of control from the prior week, so here's Friday's session, here's Tuesday's session. We had a short week, felt long. Here's Tuesday's session. So we did get that week open relative to the point of control. However, these buyers did overcome the point of control, made it all the way to the regular trading hours high, popped it, and then didn't see follow through there. And so if you recall from last week, the idea was as long as they can't hold over the point of control, this is a reasonable sell. So seeing this break, no follow through, come back under the point of control, that's the sell sign. Your stop is over the high of the day, so it's actually a reasonable amount of risk. I don't really love that amount of risk, 1.3%, but the idea was sound, right? If you can't hold over the point of control, then that daily lower high is probably seeing follow through. And as soon as they lose the point of control, initially they oscillate around it, and eventually they roll over, and then we see follow through on that. So this is just another example of using the bigger picture daily context, looking for follow through on this lower high to be set, knowing that if value continues to move lower, right, then that will be follow through on that. Technically, we made a rinky-dink lower high under this new one. So that's the idea. Good follow through on that. These sellers should be trying to come here, 70.60, as we discussed last week. They filled the gap here, and now there is another daily no change level, but this is not for the buyers. If the buyers can't find acceptance back over 74.32, then they don't negate the change of this most recent breakdown. So now we have bounced. There is space for another lower high to be set under 78.29. So now next week, we can look for a pretty similar setup. So ideally what we'll see then is value will move higher again because it moved higher on Friday. So the daily bounce is trying to get going here. And so if they can continue to move higher, but they have problems here, right? So let's say that we have another session where value moves higher, but they can't hold over the point of control, it's right back to looking for that same exact setup. The most ideal situation from here, though, would be if we get a weak open. If we get a weak open under here, right, like so, and then can't hold over the point of control, okay, same deal. We sell that, throw your stop over here, and then see if this now is the new daily lower high. Because if it is the new daily lower high, and we do see lower lows, they should be trying to come here, they should be trying to come here. All right, so that's KMX. Now we'll move on to that was the good. We'll move on to the bad. The bad is GDX. So GDX was a very similar setup where we said, okay, well, this had the potential to be this Friday, right? Here's the Friday session. This little was a potential reversal candle. That had the potential to be a daily higher low being set. And so if you'll recall, I did not touch this. This is, you can go back and I'll, obviously we'll include the last week's, a link to last week's video at the end of the video. And you can go back and see this is the exact same trade zone that was laid out. And it just happens to miss our stop by like a tick. Yeah, by a tick. And then we top tick the exit. And that was all just because that's just how these references should work, right? Why? Let's reverse engineer all this. So even though this trade didn't work out, the position play would have been fine. If you use the trade zone, right, you scale in throughout this entire trade zone, you take your profits exactly where I laid it out. It was 1.24%. So if you took off half, then you're risk-free and then some, and then you just stop out the rest. No big deal. So while this is technically the bad, but you probably made money on it if you trade it exactly using the trade zones that were shared last week. So anyway, the idea is, yeah, that's pretty much it, right? So that was it. That's bad. So even though this initial trade, so this leg of the trade worked out just fine, literally like perfectly, but it didn't fall through, and it is what it is. You never know. We never know what's going to happen, right? We can't tell if we're going to have follow through, all right? But what we can do is increase the potential as much as possible for our position play, how we get risk free, right? That part we can have the more it's like forecasting, right? If you want to forecast the weather for tomorrow, it's a lot easier than if you want to forecast the weather for even 2 days, even 2 or 3 days later. It becomes far more challenging. So that's the idea. That's why we try to hammer these position plays, get risk free, and then hold on to runners. And the runners are the real money makers. The original position play just gets us safe, right? And because the idea is the more that you're in the market in a safe fashion, the more that somebody else is in the market taking damage, you know? And so we just want to focus on a defensive perspective, right? Because most people enter the market aggressively. They think from the perspective of how can I make the most money as possible. That causes them to lead to create mistakes, right? Whereas if you think very defensively, how can I have exposure to the market without actually eating any damage? Over time, that's much more positive expected value. Okay, positive plus EV. So that's pretty much it for GDX. What do we do from here? We can still deliver the same exact thing because what's happening, first of all, GDX is now back in our original trade zone, right? I think this was our original trade zone. No, our original trade zone was down here. So this is our adjusted trade zone now that we've had breakout above it. This is honestly still fine, right? So it was a red flag for these buyers to not have filled the gap, but as long as they're holding over these highs, all of these highs here, then the change from this breakout not yet being negated. And you can see how reactive the point of control at 29.49 has been. And so if we get a strong open on Monday, it's reasonable to look for that session-to-session play. We've had just overlapping value. And so, yeah, it's reasonable. If we get a strong open here, we'll look for something like this. If it's going to go right, it's been sideways. So honestly, something like this is a little bit more conservative. It's probably more reasonable. Something like this makes a lot of sense. Pretty low risk. Fairly low risk. Something like this makes a lot of sense. And then we would just be looking to try to close this gap first because that's where the buyers just fail. Something like this, very, very reasonable for Tuesday. And essentially that would just be a play looking for the back test of this guy, right? Which was clearly the battleground throughout a lot of price action here, right? Essentially just looking for that to hold because as long as this holds, they're going to try to come here, right? Every single time that they hold this area or surpass this area, right, they try to come up here. Surpass this guy, try to come up here. Obviously this price action didn't exist yet, but that's as far as they could get on the initial run up, right? We move down, hold the back test of it, try to come up here, right? So the key structures are this guy, and this guy, right? This guy being this one, and this one being the extremes, this one being like the, the 50-yard line, right? Anyway, so basically if these sellers who are now on the offensive can't get beyond the 50-yard line, these buyers are they're gonna try to take it back to the end zone. Okay. So that's pretty much it for GDX. And GDX is technically looking for a weekly higher low, but it's so choppy back here that I primarily I don't really care about any of these trends. I only really care about, like I said, all those structures that we just talked about. Okay. And then finally, let's get into the ugly. No, I'm sorry, not yet. So it's the good, the bad, and the okay, and then the ugly. So MPC, this is just okay. It did hit our target finally for using this trade zone. And unfortunately did not come in to give us another chance at it here, but you'll notice this break didn't see follow through again. So here was a break, no follow through, come back, test these areas, hold it, and then we continue this balance, break, no follow through, come back, test these areas, hold it, break, no follow through. So what should we expect to happen now, right? So this trade MPC still has the potential to play out again if they can continue to hold these lows over, hold these structures over here. So stay frosty for this. If we continue to see new lows, we break to a new low from here, but as long as they can hold over these guys, it's all good. Okay? So that is pretty much it for MPC. That's pretty much it for MPC. And finally, we get to the ugly. So ARM is definitely the ugly, right? Because last week we were talking about the potential of if these buyers were going to remain as strong as possible and keep just stepping up, right? Making balance, breakout, balance, breakout, balance. They had to have continued that pattern to have the most confidence. They did not finish that pattern. So obviously I didn't put out any trades for it. I think Dan traded this a little bit. I don't know. He just traded in the room though. But I didn't do anything with this. I will always send alerts out to the Swing Report subscribers. If I'm, with a trade zone or something or a play-by-play. Well, I probably won't do the play-by-plays anymore because like the open trade play-by-plays because they're just too hard to follow. And that's not the nature of this publication, I realize. So what I'm always going to do then is just share a trade zone in the pre-market. And if I share a trade zone in the pre-market, it means I am taking that trade exactly like that. So anyway, oh man, you guys are the front run meeting. I guess it depends on when we get those orders in. Okay, I'll put the limit orders in, and then I'll show the trade zones. All right, note to self. Anyway, so they did not hold this guy, which would have kept them the most confident. And so this is a bit of a red flag here because now this daily lower high has been set. This daily lower high has been set here at 70.39, and the key support is now 65.11. If you hold this resistance 70.39, break this key support 65.11, that's the first time that the daily will be in a downtrend in quite some time. Technically, you have a little lower high, lower low, no break, no follow through here, but this is certainly notable, different context compared to this back here. So. But if we zoom out, you can see that the real big block of volume is over here. So while they failed to hold this guy over here, there is also a test coming here, right? The real volume is here. So let me just kill these guys. We don't really care so much about this anymore, even though it did make that low. And that was just because it's a prior hourly high here, right? So I was just watching these prior peaks before. But anyway, let's mark this up and we will look for it. We will look to it as another potential area for place now. I guess technically we're here first, right? Because this is still 4-day balance, right? Yeah, technically we got to be here first. Oh, that's quite notable, huh? Oops. $12.7 to $12.13. That's actually quite notable. So the fact that they did not come down and test the point of control of this structure here from 12.7 to 12.13, then popped above, back test of this guy was the point of control of this structure was problematic at 70.22, and now it's just ping pong now, right? So the question becomes, who's going to win out here? And we do have to be mindful that if you do lower low here, there's such a big block of volume here. Oh, really? I can't clone this? That's weird. That we do have to monitor this guy as well. So we were watching these 3 steps here to see how well these sellers can advance. And the real key, the most meaningful structure has got to be this guy, because this is where the most volume has been traded. So if they hold here, the buyers, if they hold here, that would actually be a very good look, because that would mean they prevented the sellers from getting back to where the real bulk of volume picks back up. So let me just mark this up as well, because I just got a request for that recently, because it can be hard to replicate these. Fair enough. So let's see, 11.22, 12.7. So there's the date range, and for folks following along, I changed my settings for the VP to 1,000 rows. That's really the primary change. And then I also just eliminate the up and down colors, but that's why mine probably looks different from yours. And I just want more resolution, get more detail. So you put that all together, and really, where is the trade zone now? If you're looking for like this weekly higher low potential, oops. All right, lots of space for a weekly higher low now. You're looking for like this. This whole block is really where we're at now. Now, I'm not going to come in over this big range. I will almost never do that. But I will be scouting for plays off of these structures, and I will share them with subscribers using, again, a trade zone shared in the pre-market. Okay, so that's the ugly. Obviously, the original trade zone from last week, the potential trade zone from last week was no bueno, but it's what it is sometimes. You can't be right all the time. And so this is a very reasonable new trade zone, but again, I'm not going to scale into it. I'm going to look to see what price looks like when it responds to these levels, and then look for session setups. Again, we will share those with Swing Report subscribers. If you want to give the Swing Report a shot, we have links for it in the description. I think, pretty sure we do. Otherwise, that's it. Appreciate you guys tuning in. Thank you for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I will see y'all next week. Farewell.